Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Dan Bird. And I have to tell you, this is a series that people really, really look forward to, Mr. Dan Bird. I don't know if
Good.
you've taken the time to look at the comments, but they are increasing every week with more and more people saying, this guy made me some money or saved me some money sometimes. So hopefully
Well,
that
that's
feels good.
just as good, actually.
Absolutely. It all counts.
Right? Yeah. I mean, that's good to hear. I don't usually look at the comments because
Yeah.
I'm not doing this to try to get
Yeah.
kudos or anything. But I do get notes from people in email
Yeah.
that reply back and say that yours is the one newsletter I read all the way through, and
Yeah.
it's very enlightening and very helpful. So I get good comments back, which is nice.
Yeah, I appreciate it. Well, let's talk about last week. We had a 1,000-point down day on Friday. I have to tell you that Jerome Powell did on Friday something I've been begging for. I think we've talked about it. I think Powell heading into Friday was rightly characterized as somebody who was trying to talk the market that, hey, there's going to be some pain coming. And on Friday, he basically came out in 8 minutes
I
and
know.
kicked the market in the nuts, which I have been begging for. So
one of the shortest speeches ever.
It was $78 billion off the top 1% of the 1%. It's like 132 million a second. He did what I want. He ripped the Band-Aid off. Now he has to follow through on the 21st of September. But hey, let's take a minute and appreciate that Jerome Powell walked up to the stock market and kicked it in the nuts. You don't have a 1,000-point down day if the market expected it. The market was not expecting Friday, and we got a pretty interesting reaction. So what happened to the charts? What happened? What'd you see?
Not only that, but I mean, usually in the afternoon is when the professionals step in.
Sure.
The morning is amateur hour.
Yep.
That's when retail traders.
It did not get any better in the afternoon.
Not only did it not get better, but I was thinking to myself, probably around 2:00, I was thinking to myself, this market wants 1,000. It wants to see 1,000.
Yeah.
So it not only didn't get better, it sold right into the close, which means the only reason it stopped going down
is the market closed.
The market closed. It's the only reason.
Yeah.
So what does that mean for Monday?
Well, yeah, then we have a weekend to think about it. A weekend where every article is the Fed's in charge. Don't bet against the Fed. I haven't seen a positive article this weekend. So I don't suspect that amateur hour Monday morning is going to be a lot of fun.
Yeah, it'll probably be down again. Did you see my?
I did.
Did you read my newsletter?
I did.
See my cartoons?
I did. I love.
Let me share my screen because I put one of them in there.
Yeah, I laughed out loud when I was on the couch when I read it. I laughed out loud. That's the one. Yes, the beatings will continue until morale improves. That's the one I read. I'm like, yep, yep.
And the one just before that was Powell on TV and a bull and a bear watching TV, like listening closely to what he was about to say.
Yeah.
And then the second one was that.
Yeah.
Beatings will
continue until morale improves.
And I love that, the other one in the upper right.
Yeah, the bull just banging on the door, begging for the Fed to save him. Not coming. The Fed's not coming, bull.
It was pretty good. Anyway, this is my newsletter. If anybody is interested, just send me an email.
Breakpointtrading@gmail.com, just in case you're listening on a podcast and not seeing this. Breakpointtrading@gmail.com. Sorry.
Right. No problem. And last week, VectorVest, this is VectorVest views. Every week they put in where they think that actually every day they do this, but I only put the weekly one in. So 1 week ago, it says prudent investors should protect profits and not buy stocks.
Oh, that was a good call.
That was a week ago. That was in my newsletter a week ago. Aggressive investors should play the market as it develops with a bias to the downside.
Wow. They nailed that.
This week, they said prudent investors should not buy stocks.
Wow. 2 weeks in a row.
Well, the first time they said protect profits and not buy stocks.
Now they're saying not buy. Okay.
Now they're just saying don't buy stocks. And for aggressive, last week it was play the market as it develops, which means aggressive, you can go up or down, right? This week it just says play the market with a bias to the downside.
Wow. Okay. All right.
And then the Stock Traders Almanac, which does a really extensive historical research of what the market has done over years and years. And this is from 1946. So 75 years, basically.
Yep.
This is aggregating, in general, over 75 years. This blue line is typically what the market does.
Mm-hmm.
And the orange line is where we are right now. This represents right up until Friday.
Okay.
So it's not showing that Friday drop, so it would be down a little bit. But in general, if you look at historically, and interestingly, back here in June, when the market hit the bottom on June 16th, look what 75 years worth of data shows.
Yeah. June is a bottom. Okay.
Right. So what this means, and this line is what they drew in. I did not draw this in.
Okay.
So what this means is September is probably going to be a painful month.
Yeah, you brought us that last week that September historically has been the worst month of the year, which I would have guessed October, but that's just because of the 87 and another black swan. But it's funny to think that September is the worst month of the year.
Yep, September's the worst. Now we've got an inflation number coming on the 13th.
Well, actually, before that, we got Friday. Friday's going to be
the jobs number on Friday.
Yeah, because again, the jobs number last month was a hot number, and I think we are in a good news is bad news story. So I think Friday again will be. I saw that you put this in there. It's awesome.
I'm going to do this every week now.
I think this is so important. Go ahead.
We'll do last week and next week. These are the major economic releases.
Correct.
Right. There's other ones that are not. These are just the 3-star ones. There's some that are 2 stars and 1 star, but you can get these on investing.com, by the way.
Yep.
But I'm going to put this every week, the very first thing in my newsletter. So this is last week's numbers. And you can see home sales went down.
Yeah, new home sales.
But PCE, I don't know why this is red, because actually price index actually went down.
Yeah.
So I would think that should be green, but whatever.
Yeah, it's their chart.
It's theirs. Yeah, I can't change it. So anyway, there's the initial jobless claims. But next week,
excuse me,
as you said.
Yeah, that Friday number, that's the most important number of the week. Because again, this is what I see. Because yes, we will get a CPI and a PPI print the following week. But next week, let's not forget that the previous number was hot, over 500,000.
Yeah, that's right.
And the expectation
right here, 528.
Yeah,
was the previous, where I think they were expecting 250 last time.
Yeah, 253.
Right. So it doubled.
Yeah. So everything I'm seeing, the job market is still hot. So expectation is 285. If it comes in at 400, that is just going to be more evidence that the Fed needs to bang us with 75.
Yeah, be more ammunition. But by the way, after Powell's speech, I am now leaning more towards 50 instead of 20.
That's funny because now I'm leaning towards 75, not 50.
Right.
It's funny.
I mean, it could very well be 75, but
I think he almost guaranteed it. I mean,
I don't necessarily agree with that.
Well, I could see why.
I think he's using his bully pulpit to get the market. So he's
talking tough.
He's talking tough to get the market to do things.
Well, he can only do that once.
Right.
And that's why September.
The market's already been starting. Layoffs have started, and even if it's not layoffs, it's reduction in hiring.
Yeah, hiring freezes and all of that.
Right.
Yeah.
So some of that's already started. I think companies are preparing for a recession.
Of course. Well, yeah, 50% of CEOs, I think there was an article I talked about in my daily financial news, are planning layoffs sometime in the next 6 months.
Right.
Yeah. Yeah. I mean, the economy's not in great shape. And the Fed on Friday in 8 short minutes said pain is coming.
Yeah. But if you think about it, so let's talk about this for a second. If you think about it, he did not say anything that he hasn't implied previously. He just said it more strongly.
Well, so I know so lots of people say that, which I agree with and I don't. So instead of agreeing with you, I'll take the other side. I think the other times he has said what he said, he had a comma and he continued with other words.
Right.
He dropped the comma and he put in an exclamation mark instead.
Yes.
So I
Yes.
do think it is a different message.
No, I don't disagree with that. And my second point was when he has said the similar things before,
Mm-hmm.
the market has wrongly interpreted that to mean he's going to pivot.
Well, yeah,
And
no, that's why I think.
And everyone's talked about a pivot, like last year
Well, I mean, we have a really Kathy Wood is a great investor that said a pivot was coming in September.
Right.
That is wrong.
Right. Well, a year ago he said inflation is transitory.
Of course,
transitory was the big word,
mm-hmm.
right? And then up until this week, he was using pivot. Well, actually, he wasn't even.
He
using
wasn't
pivot.
using. He was talking out both sides of his mouth, trying to be data dependent. Yeah. I think he changed what he said without changing what he said. He basically said everything.
I think he changed what he said because the market started talking about pivot and he wanted that to be taken off the table.
Exactly. So I do think he changed what he said. Exactly.
Because what's going to happen, I think, is there's not going to be a pivot. He's going to get to a certain point, whether it's 50 or 75 next time, or 50 and 25 and 25, or 25, 25, whatever it is.
Mm-hmm.
There will be evidence that it's working, but he's not going to start reducing rates.
He's going to pause.
I think he's going to, whatever point he gets to, he's going to stop and he's going to leave it there for a long time.
That is new. Yes, I totally agree with you. Absolutely. That is, and again, I believe that is a new message. He came out in like his first 15 seconds. I'm going to be clear and concise. And he was 8 minutes for a Fed president. That is wild.
Right. Yeah.
And I think you're right. I think what he said is rates are going to go up and then they're going to stay there much longer than you all expect. That's what I think he said.
Yeah, I agree. I don't know if you saw the interview with Bostic, Fed Chairman Bostic, with Steve Leisman.
I did not see that one. No,
it was early in the morning before the market opened on Friday.
So pre-Powell.
Really good. I mean, I really like that guy, Bostic.
I do too. I think he's great.
He's very open, very honest, and very clear and concise. But he said, based on the data that's come in so far, that he's leaning a little bit more to 50 than 75.
Oh, I did see this interview. Yes, I did see that.
But he said, but let's see what the rest of the data looks like, because we've got a lot more coming.
Mm-hmm.
And then he made it very clear. I mean, before Powell's speech, everyone should have been prepared for it, but he made it very clear. He says, whatever we get to, and probably 3.5 is the rate that we want to be at. He says, once we get there, we're not going to be coming down for a long while. Yeah.
See, so I think you and I totally agree with that. Now the question everybody has to ask is, what is that rate? I don't think it's 3.5. I think it's 4.
Could be 4.
It could be 4.25. It's one of those two numbers.
Yeah. I think it's going to depend on what the data looks like.
Yeah. So, okay. So again,
we've got another inflation report on the 13th.
And again, we can talk about it right now. I think headline comes down, but core stays stubborn. I think that's where we are.
I agree. I agree with that.
Core stays stubborn.
Yep. I think headline will come down, but I don't think it's going to come down dramatically.
No, I think it's probably low 8s.
Yeah, like 8.1, 8.2 maybe.
Exactly. 8.1, 8.2.
I actually looked at well, let me bring this up. I actually looked at the gasoline. Here's gasoline.
Mm-hmm.
So the next one will be for August,
mm-hmm.
which will be, so the one in August was for July.
Right.
Which was actually
the 12th. Yeah.
For gasoline was July 12th, right about here, until August.
Yep. So a little lower. Yep.
So that was lower. And then, so that's going to be a little bit lower. So I think it's going to come down a little bit just based on that alone.
Yeah. But it's going to be all about core. I mean, again, core didn't go down last time.
Right.
Yeah.
Yep. So I think it will be looking a little better, but not enough.
Yeah. And that's why I think we're going to bang on 75. That's what I think Powell told us is and again, as far as I'm concerned, Powell has to give us 75 or the market's going to start not believing him. That's where I sit today.
Maybe depends on the date. Depends on the data between now and
Yeah,
then.
we got 3 weeks. We'll see what happens.
If this CPI number comes in at 7.5,
Oh yeah, if it comes in at 7.5 or 7.2, I reserve the right to change my opinion. I can only deal with the data that I have today.
sure.
Right now, I think Powell's telling us 75 is coming.
Right. Exactly. So let's look at what the market did.
Yes, please.
So this is my trusty rotation chart.
Look at that.
There's that big Friday sell-off.
Yeah.
So we broke through 4150, which was support back here. Interesting. Look at the 200-day, and we're going to talk about the 200-day in the second session that we do.
The second video will be about the 200.
Because I put an idea in my newsletter about that, and we'll explore that a little bit. But look how it just went right up to the 200-day.
Yep.
And then got rejected.
Yep.
And then now it's dropped through the 21-day, and the 50-day is right below.
Yeah, where's the 50-day? 4,000?
4,000. I think we'll get there Monday.
Okay.
And then we'll have to see what the market does. We'll see what the traders thought about over the weekend. If they started thinking, yeah, he's serious. Now we know he's serious. Now we know there's no pivot coming. But other than that, really, it hasn't changed much.
But I think that changes everything.
It could.
I really do.
We'll see.
I think
we're going to see.
I talk with you every Sunday. I have another trader on Monday I talk to. For the last month or so, a lot of our discussions have been the market thinks this, the bond market thinks that. I think it changed. I think there's a lot of people, a lot of retail, a lot of folks who are like Kathy Wood calling for a September pivot, which I never saw. And I'm like, I don't get it, but damn it, the market wants to believe it. And I think that just got retired on Friday.
I think the market now doesn't believe that there's a pivot coming.
Yeah, and it changed in a day. I mean, I forget what it's called, the 5-year forwards, I think is what my guy talks about on Monday. Those went up 0.5 point.
Right.
In a day. That's like a big move. So
yeah, we'll see. 50-day, that's the next support. That'll probably get taken out.
Okay. What do you think about the Bowley bottom? Hopefully I'm saying that right.
The Bowley bottom.
Yeah, it was close.
I tuned into his session Saturday yesterday.
Is he still standing by? Do you think that bottom will hold?
He not only is he still standing by it. I don't know if you saw Kramer last week.
I did, yeah.
Kramer said,
"Bottom."
I am saying that the bottom is in.
Yes.
Nice to say that after a 18% move higher.
Yeah, exactly. Good job, buddy.
Bowley sent it exactly on the day.
No, he gets full credit. He called the day.
On that exact day, he said, "I'm calling the bottom right here, right now."
Good for him. No, full credit, and we have video evidence. It was recorded. Yeah.
Yeah, and he's I've got his newsletters from that day, dated that day, to show it.
Pretty cool.
But will that bottom hold? Well, he still thinks it will, but he's hedging. He's hedging a little now.
Okay.
It could drop through. So we'll see.
That's roughly what, 10%? I guess 8% maybe. That's about 8%.
Well, down to 3,600 is about 10%.
About 10%. Okay.
A little more.
All right. Yeah, we went 4% on one day. So,
right.
You could get there next week if it got real ugly.
Yeah. By the way, full disclosure, as we were going up here, I did buy up. I think I told you about a couple of them, AMD and AOSL, to chip stocks.
Yep.
I got stopped out of them Friday.
So you took a small L because you had stops.
I took about a 3% loss.
Oh, there you go. That's not bad.
But I'm out now, and I'm not quite out of everything, but the rest might stop out first thing Monday morning.
Okay. You didn't move any of the stops down?
No, you never move stops down.
I'm just asking.
You never do that. You move stops up,
not down.
But never, ever, ever move stops down.
I like it. Okay. So I think you told us in one video you were about 60% invested. Yeah,
I'm probably maybe 20% right now, and one day I could be 0%.
Okay. All right. That's good to know. I think that's self-reflection is always good. Thank you for that.
Oh yeah. Well, you're always learning. So
yeah, of course.
You're never right all the time.
Yeah. But again,
When
I love
when you start thinking you're right, then you should stop trading.
Yeah, you should stop trading. Amen to that.
Just sell everything and just
yeah, when you think you have it figured out, exit the market, please.
Exactly. So the 10-year down here is back to 3.
Yeah, the VIX is up, but not crazy high. 25.
Not dramatically. It's up to 25. I mean, 30 is really the area where we start to see. I mean,
it'll be interesting.
That's not necessarily a good
two.
thing.
No, I
agree.
agree.
Not really a good thing that the VIX is not up there.
No, yeah. You had 1,000-point drop and no capitulation. Yeah, that's a good point.
Right.
That's a very good point.
So what that means is there's more selling coming.
Well, yeah, it certainly could be. Yeah.
I mean, you want to see the VIX over 30 because that's when you know you're getting close to a bottom in time to reverse.
Isn't 40 like max selling?
40 is like very rare that it ever gets
very rare. Exactly.
Yeah.
Okay.
But look at where the bottom was called over here. VIX was at 35.
Yeah, it's true. Good for him.
Right.
Yeah.
So I mean, you kind of want it to be up high because
the 10-year note definitely reversed. I see that in your bottom chart.
Yeah, it went up and then reversed a little bit.
Yeah, I think that will be higher. I think it's higher at the end of the year than it is today.
We'll see.
Yeah. Oh, really? Oh, all right.
Yeah, I don't necessarily agree with that.
So again, 10-year as of this recording is at 3.1, just so we're on the same page.
3.03.
Oh, 3.03.
3.04, let's call it. It's
okay.
Right over here on the left.
Oh, thank you. Okay, so 3.04. So you actually think by the end of the year it will be plus or minus, I don't know.
I think it will be right around the 3, maybe a little lower than the 3.
Wow.
2.9 to 3.1.
I want to make sure this is interesting. So again, we are talking about the 10-year. We're not talking about the 90-day.
Yeah,
the 10-year at, let's just call it 3.1.
Right.
You realize that the federal funds rate could very easily be at 3.25 by the end of the year? Do you realize that?
I do. But
and you still think that you think we could have an inversion to that level?
It's already going up. And look what's happened, you know, when the CPI went from 8.6 to 9.1. 10-year kept going down.
You're not seeing it. This was the market believing there was a pivot coming. That died Friday.
This is the bond market here, though.
No, I agree. I know. So okay,
right.
this is going to be fun
We'll
because basically what you're saying.
I'm just not convinced that the bond market believes that inflation is here to stay.
Here's one for you. I believe the 10-year note might have a 4 on it. Ooh. December 31st or whatever the last day of the year.
If that's the case, then this is not the bottom.
Okay. All right.
This is not the bottom. We could be going to 3,200 if that's the case.
Okay. Well, I love it when we disagree. I love it.
So here's my head and shoulders that I showed last time. There's maybe a reverse head and shoulders working here, but it has not confirmed yet.
Okay.
So this is the area that I'm watching, around between 39 and 4,000.
Okay.
If it gets down there, so there's a 50-day at 4,000, I think it's going to drop through that. If it gets down here to 3,900 and then reverses and starts back up again, then I think we will have an inverted head and shoulders in place.
Okay.
If it doesn't, if it just keeps on dropping,
right,
and that's off the table.
Got it.
And then we'll have to start thinking about the bottom, whether the bottom is really in or not.
Okay. I like it.
So all of this really is to say right now,
it's very noisy.
It's unsure.
Yeah.
And when things are unsure, it's not a good time to trade.
I think that's great advice. Yeah.
So I will probably be out Monday.
Right. Stopped out, to be clear.
I probably won't get back in.
Okay.
Until I see some of these things confirming the uptrends going back again.
Well, that's why we talk every week. We appreciate that on this channel. Again, if you go back and look at some of the comments, people have been very thankful for what you're doing on the channel.
Yeah, one of the things that I'll be watching closely are these rotational graphs here.
Do they change?
Back in December, they implied that the market was getting ready to go down when the market was making new highs and rotation was rotating out of growth.
But they all look like they may start their rollover if you look at them.
They're breaking through their uptrend line.
Correct. All of them.
All of them. Yep. However, they have not gone back down to where they started,
I look forward to this chart next week.
which is where the low was. This is where the bottom was.
Yep.
So if this keeps dropping, if this drops back, if it goes through 3,900, back down in here to 38, 30, 3850, 3,800,
yeah,
and these continue to drop, which they probably will if that drops like that.
Yeah.
If these get back down, if this gets back to the bottom at 3640 roughly.
Yep.
Right. But these do not reach the bottom here, then and then this starts going up again.
Okay.
Then that means this rotation was still in play, that institutions were still rotating into growth and maintaining that.
Okay.
But if this gets back down to here, and this gets back down to here,
right, and they break,
then
or they get there,
that means the institutions are rotating back again.
Okay. I like that.
All right. So that's the one I'll be watching.
Yeah, I think that'll be a nice chart to look at next week.
This is the Keltner channels.
This
kind of shows you the reversion to the mean.
Yeah, where did we go? Are we in the second?
So right now we are just into the second, just barely into the second.
Okay.
So on the way up, we actually got into the fourth.
Yeah, for a day. Yep.
The fourth average range, fourth average true range, or average true range times 4. Let's say it that way.
Yeah.
So the average daily range times 4 is what we got, which is very, very rare. And usually it reverts to the mean. The mean is this blue.
Yeah, and that hit the 200-day moving average, tying together multiple charts. Yep.
This is a 21-day here.
Right.
So we came back to that, went sideways, tried to break out of it, and then dropped down. So usually when it gets to an extreme, you get a reversal. So the extreme now at the third ATR down here is at about 39.50.
Okay. Well, there you go.
All right. So again, that's the area that I'm watching. If it gets down there and reverses, that will be a positive thing. If it gets down there and continues lower and this pushes all of this down and even gets to the fourth ATR, then we're probably headed lower.
Got it. Okay.
What else do I have here? This is the dollar. Dollar is not helping.
No, the dollar's getting stronger again. This is again Jerome Powell walking up to the stock market, kicking in the nuts. Because of that, the dollar's going to get stronger, setting new all-time highs.
Right.
Yep.
Yep. It's set
and
a new
will
time.
Hurt. That will hurt S&P 500 stocks, which just will.
It will. It will hurt multinationals for sure.
Absolutely.
And the Dow in particular, because you saw what happened to the Dow.
Correct.
1,000 points. So,
absolutely right.
And this is the 10-year down here. So kind of putting it. There's the 3.
There's the 3%.
It's right about worth.
I think we see a 4 by the end of the year.
Well, we're going to see, aren't we?
That's why this stuff's recorded. You go back and check his playlist. We don't always agree.
Here's the VIX. We talked about this before, but right here you can see.
It'll be interesting if that spikes Monday or Tuesday, because all retail investors have been hearing over the weekend is just not good news.
Yeah. So it's at 25.5 right now. That's the gray area. These are 5-day and 21-day moving averages. So when it turns red, that means the 5 days above the 21-day.
Oh, okay.
Okay. So when it turns red, that means the VIX is going up. The gray is where it's actually at, so 25.5. So if this gray gets up here to 30, and especially if the red gets to 30, that means the VIX has actually spiked higher than 30.
Right.
So you see over here, the red got above 30, got to 31, but the VIX actually made it to 34.
Got it. Okay.
So it's never good if this is red. Means the market's going down and the VIX is spiking.
Right.
And this down here is the 50-day, the percentage of stocks above their 50-day moving average. This was looking really good off the bottom. Down here, it was less than 10%.
Yep.
For the S&P.
Yep.
So less than 10. In fact, it got all the way down to 0.6%. It got down here, it was at 2% at the close.
Wow.
So 2% of 500 stocks is only 10 stocks.
Yeah.
So only 10 stocks were above their 50-day moving average. And this is the 200-day down here.
Okay.
And then once we hit the bottom, we started back up again.
Yeah, makes sense.
Now we're dropping off a cliff.
Yeah, we did.
So this is coming back down. So this also is something to watch for a bottom. This is helpful to see when stocks are bottoming, when the stop's going down and starts moving back up.
Very cool. All right.
So we're going to see. Now, one thing I put in my newsletter this week was an idea around the 200-day moving average.
Yeah, let's save that for video number 2.
That'll be the next video that we do.
Mhm.
But it's a pretty interesting idea and something that I kind of got from looking at Paul Tudor Jones,
Awesome.
which I'll talk about in the next video as well.
Well, do me a favor, show the newsletter one more time so people can get a hold of this if they want to see it up close and personal. It's something I read every weekend. I just read it this morning.
By the way, one other thing for this week is
look at that.
These are the sectors for the week.
Yep.
And all of the growth sectors are lagging.
Yeah.
Technology is last. Consumer discretionary, communications. These 3 are the ones that you want to be leading if the market's going higher.
Gotcha.
Right now they're lagging. And energy is back in play again. The only one for the week that was positive.
Go figure.
Right. So that also does not bode well for next week either.
Yep.
So here's the newsletter. If anybody's interested, just send me an email to breakpointtrading@gmail.com. And if you do, I'll send you this week's newsletter and then put you on the distribution list.
Awesome. And let's remember that Jerome Powell said on Friday, the beatings will continue until morale improves. Thank you. You and I have had sales leaders where that actually said stuff like that, but yeah,
actually executed on stuff like that.
Yeah, exactly. This was a normal weekly QBR or forecast call. It was kind of funny.
Yeah. Anyways, I don't know if that strategy would play anymore these days.
No, probably not. But you and I have seen it and experienced it. It was not fun.
But ironically, the beatings will continue. And here you have the bull beating on the door.
There you go. Thanks, buddy.